Hi, good morning, everyone. Ladies and gentlemen, welcome to the eighth edition of our IR4U series. The topic for today's webinar is the power of perception using media to elevate your company valuation. Our speaker for today is Mr. Khoo Hsu Chuang. Hsu Chuang is a seasoned financial journalist with 25 years of experience covering financial and capital markets in Kuala Lumpur, Singapore, Tokyo, Hong Kong, and London. Previously, he has worked in global media platforms such as The Age, Bloomberg, Thomson Reuters, and BFM Radio. So he has experience working in various media formats such as print, newswire, radio, TV, and the internet. I'm sure some of us have seen his bylines in the newspaper, and we have heard his voice over the radio. So apart from the media, Hsu Chuang also spent 9 years in corporate governance advocacy as an analyst at the shareholder activist organization, which is the Minority Shareholders Watch Group. Today he is the managing director of Do More Media Group, where he has trained chairmen, CEOs, directors, and senior management from public listed companies, multinational national corporations, and large private firms, guiding them in media and crisis communication. Without further ado, let's start our webinar today. I will pass over to Hsu Chuang. Over to you, Hsu Chuang.
Yeah, thanks, Chung. I'm going to share my screen now. And can everybody see this? Chung, can you say that you see this?
Yes.
Right. Okay. Right. So thank you, everybody, for attending this. The title of my presentation is Using the Media to 10x Your Valuation, okay, by myself. Okay, so I think in essence, what we're trying to do here is to communicate to the audience that you can actually harness the power of the mass media, and the mass media include not just the traditional media, but technology-based social media as well. To use them, and the key word here is to use them to amplify your messaging. And basically, they're just a few key principles of engagement, which people might not realize, but they actually exist and actually very effective in terms of amplifying your message. Okay. Now, just in terms of myself, what I've come to realize is that having covered public listed companies, large corporates, CEOs, and their senior management teams for literally nearly 30 years, working for The Edge, Bloomberg, Reuters, BFM, even the Australian Financial Review, in basically 3-4 countries in 2 continents. And actually, I've trained CEOs for about nearly 20 years in the power of using the mass media to communicate their messaging. I've come to realize that the majority of companies, they don't actually understand that the media is actually really, really powerful in getting them to realize their full valuation. And companies which are traditionally led by people who are able to understand and harness the media are actually the very, very vast minority. I call them the 1%ers. The 1%ers are able to really communicate their company's not just the existing business, but their future business journey to the market in a way that it enables them to fully realize their market valuations. So companies led by 1%ers, typically they enjoy multiple benefits, right? For the purposes of today, of course, we talk about superior market valuations. They typically trade, companies that are led by 1%ers, they typically trade at higher multiples versus their peers. Good examples, of course, in the US, Palantir trades at something like 400 times earnings. Tesla trades at something like 210 times earnings. And I mean, just to take Tesla, for example, Tesla is a car company, ostensibly. They probably produce a fraction of the number of cars that VW or Toyota produce on an annual basis, but their market valuations are 4 to 5x that of Toyota's. And the reason that is the case is because it's led by a company CEO in the shape of Elon Musk, who is able to narrate the future in a way that persuades the market to value Tesla not as an automotive company, but as a technology AI company. And that's the key difference here. The second benefit, of course, is that if you are led by a 1%er communicator, you typically receive preferential treatment by regulatory bodies or the governments, held up as shining examples by the governments. A good example is NVidia. Jensen Huang traditionally follows the president around on his global roadshows, held up as a poster boy by the president as an example of American business, American diversity, the ability to stay on the cutting edge of technology, and so on and so forth. And well, behind the scenes, of course, there are many benefits that these companies receive that maybe their peers may not receive, because obviously the better NVidia does, the more jobs, the more industry capacity development, and the larger the benefits to the wider economy, and therefore the more benefits to the ruling government of the day. The third benefit is that companies that are led by one percenters traditionally and empirically attract the qualitatively superior employees. Good staff want to stay along to ride on the journey with the CEO, and obviously enrich themselves when the companies go public. I guess less poorer performing employees typically get attritioned out, and because these CEOs, they are in the press and speak so convincingly of the future and narrate such a beautiful journey for the future, they typically are quite inspirational and seen as people that staff might want to work for. So they attract qualitatively superior employees. And a good example, of course, is Tesla. His management team and his engineers are widely known to be top of the bunch, top drawer people, and obviously the kind of stuff that they're doing in terms of whether it's battery packs or robots or humanoid robots or AI systems and self-drive, they require the top brains in the industry. The fourth benefit, of course, for companies that are led by one percenters, the fact that they benefit from superior partnership ecosystems. So whether you're Microsoft or Nike or Intel, the best companies want to work with you. They want to say that they are in the supply ecosystem. A good example is Malaysia, where companies like Globe Products, for example, they enjoy a market premium because they supply parts to Apple, and therefore, as a result, it's a virtuous and expanding cycle. And I think last but not least, is the fact that companies that are led by one percenters typically enjoy superior brand equity, better brand stickiness, better brand loyalty, and a very good example of that is Apple. The Apple loyalists all over the world, they will only buy Apple products, even though on a feature basis or even on a cost basis, on a feature basis, they might lose out to the Koreans or to the Japanese products. And even on a cost basis, they actually cost more. But people want to buy Apple because of what it means for them. And even though Steve Jobs has left us for many, many years, that loyalty continues until today. So I've got a few case studies today. I've got three. And my first case study is a company called MicroStrategy. Now, until COVID, not many people knew who MicroStrategy was. They actually have been a software development company, and they've been listed since the late 90s. And as you can see from the chart, their market cap stayed very, very stagnant and very, very lukewarm for many, many years, of about 20 plus years, until in 2020, Michael Saylor realized that when his company was being left behind as a result of government policy that sidelined his business and benefited Microsoft, he realized that he had really something that he had to do to reinvigorate the business model. So he decided to, I think he had $500 million of cash, something like $500 million of cash on his balance sheet. And either he was going to give it back to shareholders or he was going to do something radical with it. I think he explored all the options, including new business lines, including mergers and takeovers. And he came to realize that one of the most effective ways you can actually transform the business was to turn MicroStrategy at the time into a Bitcoin treasury business. But he also realized that Bitcoin as a concept was actually very, very difficult and very complex for people to understand. So he realized he had no choice but to adopt an aggressive and highly publicized strategy to transmit this change. He did it very, very frequently. He did it very, very convincingly. He took it very, very seriously. And as a result, he was able to convince the market that he was able to produce a Bitcoin treasury company, which essentially weaponized his balance sheet to use Bitcoin to make it a weapon that could transform his market cap. And as you can see, since 2020, he has seen an increase in his market cap from $1 billion in 2020 to $90 billion as at this point in time, around about 80 billion as of today's market price. That's a 5-year CAGR of nearly 80% every year since 2020. And that's a total share return of about 20x to investors since 2020. So if you had bought MicroStrategy, I think at the time was something like $5 or $10 at the time, to right now it trades at, I think, $290 a share. That would be an enormous return. So just to exemplify what he looks and sounds like, I've got a case study, a video for you to have a look.
Of course, MicroStrategy, strategy as it's now known, really started this crypto treasury company trend that we're seeing now. I know that you broadly are supportive of seeing that, seeing competitors come out and also raise their own crypto treasuries. But how do you feel about the trend that now it's moving more into altcoins? It's moving away from Bitcoin. Do you think that that's a sustainable setup?
You know, I still think the vast majority of the capital flowing in the space is flowing into Bitcoin. We've gone from about 60 companies capitalizing on Bitcoin to 160 companies just in the past 6 months. So I'm laser-like focused on Bitcoin. I think Bitcoin is digital capital. I think it's going to outperform the S&P index over the indefinite future. And I think it's the clear global monetary commodity in the world right now. So it's the lowest risk, highest return, most straightforward strategy if you want to outperform the S&P and if you want to inject vitality and performance into your balance sheet.
So it sounds like
you'll notice that this person, Michael Saylor, is what I consider a 1%er, a spokesperson. And they typically follow a rule book, which goes something like this. They narrate a big vision, a big journey, a big, beautiful future for the business. They address one target audience in their media interviews. They send 3 messages, no more than that, no less than that. And those messages are substantiated. And they typically they communicate that in roughly 60 seconds or less. So again, just to repeat, one big vision, one target audience, 3 messages, 60 seconds, time and time again. I see this time and time again in my 20 years, 25 years covering financial markets. And that's the difference between a 1%er spokesperson and a 99% the rest of the world. These people, they don't answer questions. They actually send messages. They actually use these media platforms. They use it. So the key word here is they use these media platforms. They control the narrative. They send messages instead rather than answering questions. And they narrate this beautiful future. So if you look at this messaging, Michael Saylor talks about how Bitcoin is digital capital. That's a big idea. That's a big phrase. He says that it's a clear global monetary commodity. It's the lowest risk, highest return, most straightforward strategy to outperform the S&P 500. And if you want to inject vitality and performance into your balance sheet, this is what you got to do. And since he's come out to transform MicroStrategy into a Bitcoin treasury holding company, I think something like 50 or 60 other digital asset treasury firms have come out in the last 2 or 3 years in a kind of like a copycat fashion. And they say that imitation is the highest form of flattery. Notice also that he speaks simply and in sound bites, very relatable, very clear. And if you notice here, the timestamp, including the question from the Bloomberg reporter, the entire first response was in 1 minute and 3 seconds. So again, one big idea, one target audience, and his target audience in this particular case are clearly Bitcoin holders or soon to be or potential Bitcoin holders. So one big idea, one target audience, 3 messages, 60 seconds. So that's the substance part. The performance part is the performatively credible look and feel. Notice his serious facial expression. Notice the Bitcoin logo on his t-shirt. Notice the choice of his location for this virtual call. Notice his tonality, the conviction in his voice. So from a substantive point of view, the boxes are ticked. From a performative point of view, the boxes are ticked. When they align together, it's actually really, really powerful. Okay. So the commonality among all 1%ers is the ability to command data points, the ability to develop messages, to put data points to them, to ensure that the data points are very, very defensible and very, very differentiated to make them sound completely far apart and standing out from the rest of them. Okay, so have a look and listen to this one.
Of course, MicroStrategy, strategy as it's now known, really started. So it sounds like you're not concerned that perhaps the fact that we're seeing these other digital asset treasury companies come to the fore here, expand into altcoins, you're not concerned that that's going to detract attention away from what strategy is doing?
I think there's an explosion of innovation across the entire crypto economy, and on the margin, it's really good for everybody in the digital asset space right now. I think the big idea is $100 trillion plus of capital in the traditional equity capital markets and traditional credit markets. And what we're focused on is delivering digital asset-backed equity and digital asset-backed credit. And I think those credit instruments and equity instruments are just going to outperform the traditional fiat credit and traditional fiat equity instruments all around, and capital is going to flow into the digital economy due to that.
Michael? So once again, he's using this media interview with Bloomberg to basically send a very, very powerful message to both existing Bitcoin holders and potential Bitcoin holders to tell them that the total addressable market, the TAM, in this case, is the $100 trillion in traditional equity and credit markets, equity capital and credit markets that could potentially migrate to digital assets. And he's the solution provider to that, because that's what MicroStrategy does. So if today Bitcoin is at a $2 trillion market cap, give or take, that's a 50x potential return. So he's communicating to both Bitcoin holders and Bitcoin holders that is the potential increase in price of Bitcoin. So again, he's using the media, one big idea, one target audience, 3 messages, 60 seconds. And that's the rule book that these guys continuously pursue time and time again. My second case study is a company called NVidia, which is, of course, no surprise, no stranger to anybody. Now, if you have known NVidia, they started out as a gaming hardware company in the 90s, but they strategically pivoted into AI in the mid to late 2000s. If you look at the chart, the market cap was basically trundling along the sea at the bottom of the seabed from the late 90s until the late 2010s, around about 2020, when the fruits of Jensen Huang's pivot into AI started to bear fruit. Jensen Huang realized that to drive awareness of NVIDIA's key role in AI, Jensen Huang is a Taiwanese CEO. He's actually born in Taiwan. He's a Chinese guy, quite a reclusive guy. He's an engineer as well. But he realized that in order to communicate to the market this big change in direction for NVIDIA, he had to come out. He had to come out and speak about the transition from the niche gaming space into the wider public consciousness, to talk about this transition to AI. He did it so well that, in fact, he's become known as the godfather of AI. Dan Ives, the very famous tech analyst at Wedbush, calls Jensen Huang the godfather of AI. Meta CEO Mark Zuckerberg calls Huang the Taylor Swift of tech. And if you look at it, in October 2020, NVIDIA's market cap was $327 billion. In October this year, the market cap is $4.5 trillion market cap. In fact, it is the biggest and most valuable company in the world. In fact, NVIDIA is so big that its market cap eclipses the economies of the UK and Germany combined, and is still bigger than them. It's translated to a 13x increase, a 13x return to shareholders over just this 5-year period. Okay, so have a listen to how Jensen Huang addresses this interview with Jim Cramer.
President CEO Jensen, you laid out $1 trillion. Obviously, I think that was an arbitrary number, because if you said $3 trillion, no one would believe you. But 2 years from now, what's going to be? 1 year we did this. What happens 2 years from now? I mean, do we find out we needed 10 times the 10 times?
Yeah, we're going to need a lot more computing, and we're fairly sure now that the world's computing capex is on its way to $1 trillion annually by the end of the decade. So we're fairly certain of that. We're also very certain that the vast majority of that will be used for AI. And so our opportunity as a percentage of $1 trillion by the end of this decade is quite large. And so we've got a lot of infrastructure to build.
Okay, so the same rule book. He qualitatively, Jensen Huang, sells the big idea. He talks about how the computing world will need a lot more computing. He's fairly certain that global computing capex will be $1 trillion, that's with a T, annually in the next 5 years. He says he's very certain that the vast majority of that capex will be used for AI. And NVIDIA's opportunity as a percentage of $1 trillion by the end of that decade is going to be quite large. So you know that in the US, SEC guidelines prohibits CEOs from offering too much information. So what he's allowed to do is guide the target audience into understanding what he's trying to say. He's basically telling shareholders there's a lot more growth to come. His target audience is, in fact, in this point in time, shareholders, both existing shareholders and probably shareholders that are potentially going to buy NVIDIA shares. So there's a big number, there's a big idea, there's a big number, there's an aggressive timeline, there's a market share promise, and the target audience is, of course, clearly shareholders. And the reason why the press like Jim Cramer and CNBC and Bloomberg will give people like Jensen Huang time, not just because of the size of the business and the newsworthiness of them, but their ability to use data points, big newsworthy data points, to sell column inches, because what they say, because they're the big aggressive timelines and big numbers, they're very, very newsworthy. So again, if you look at Jensen Huang, I think Jim Cramer's question ended at about the 45-second mark, including his reply, Jensen Huang. The entire first reply was actually completed in 1 minute and 15 seconds. So again, one big idea, one target audience, 3 messages, 60 seconds, clear sound bites, data points, clarity. Okay? Once again, that's the rule book. That's the playbook. The third case study and the final case study is Tesla. So everybody knows Tesla. Now, they are a car company. They just reported results actually yesterday. But the difference is that Tesla, although they make far fewer cars, they produce far fewer cars than, say, VW or Toyota. Tesla's market cap is something like 4 or 5 times that of Toyota, even though they sell a fraction of the business. And the reason why the market values them not as a car company, but as a technology AI company, it's not just because of the work that they've done behind the scenes. It's also because they've got this guy, Elon Musk, who's the owner of the business. I think he's got something like 20% share in Tesla. And he's just been awarded this new compensation package, which will not just give him more shares in the business, but also more voting rights in Tesla. It is led by a guy called Elon Musk, who is able to harness the media, use the media, not just the traditional media, but the social media as well, to ignite significant public interest in the business. And notice that Tesla does not buy advertising. They do not buy ads, or they don't spend any money in marketing. They rely completely on Elon Musk and his media presence to drive massive brand awareness. So if you look at it, Tesla's market cap grew from about $120 billion 5 years ago, give or take, to $1.4 trillion today. That's roughly an 11x return to shareholders over that same 5-year period. Now, notice also that their earnings haven't been spectacular. Their PE ratio, however, is massive, and it's always on the premise of future earnings. And the reason why the market is able to give them such huge valuations is because of this guy, Elon Musk, right? So, of course, I have to ask AI, how is it that Tesla is able to benefit from Elon Musk's social media presence? It's basically given us 5 key results. Number 1, Tesla does not spend any money on advertising. Number 2, because of his huge organic reach and hype, Elon Musk can transmit upcoming product launches. He can generate instant global buzz for new products. It replaces expensive launch campaigns. And we know that when he introduced Cybertruck years and years ago, he was actually taking orders, significant pre-orders, and won significant media coverage, even without prototypes even being built already. The third thing about having this guy who is so visible is that he has this ability to build authenticity and to build a community around Tesla. So very much like Apple, people who buy Teslas buy into what the brand stands for rather than what the product is by itself. And because of the way he speaks, because of his other businesses in things like SpaceX and Neuralink, Elon Musk is known as the Thomas Edison of our times. He's trying to solve humankind's biggest problems, things like depopulation, things like global traffic, things like climate change. And because he is positioned as an innovator, markets and customers always buy into what's coming down the pipeline, what's in the future. Markets always price a company's shares based on what's coming down the line, future earnings. And that's one of the reasons why Tesla's market cap is something like 210 times earnings versus Toyota's 35 times earnings. And of course, it's a double-edged sword because because Elon Musk is a bit of a maverick. So whatever he tweets sometimes, whatever he does sometimes, it doesn't always end up positively, so that it has significant risks. But this is the difference between a company that is led by an owner versus a company that is led by a professional manager. Sometimes people say to me in my training sessions, oh, Tesla is different because it's led by an owner, people like Elon Musk. So he feels that he's got more autonomy and more agency to speak like that. Same as Jensen Huang. To which I often reply, there have been companies in the past that have benefited from very, very powerful communicators, people like Steve Ballmer and people like Sheryl Sandberg. These were professional managers that were hired by the company owners, whether Bill Gates or Mark Zuckerberg, because these people were able to fill a void, to fill the gap where they themselves could not. So as a result, Steve Ballmer was very, very effective in building Microsoft at his time. And latterly, Sheryl Sandberg was very, very effective as a communicator who was able to build Facebook and now Meta's market value from something like 300 billion market cap to something like 1.5, 1.6 trillion market cap in her years. When she retired from the board 3 years ago, she was already a billionaire. I think she was worth about 10 to 15 billion because Mark Zuckerberg really, really rewarded her with huge share options for her ability to really build Facebook's profile. Have a listen to Elon Musk. He's not a great communicator, but he's able to deliver on those key principles of a 1% spokesperson.
I believe Optimus is going to be the
And that really is going to be a very remarkable robot. It will have essentially the manual dexterity of a human, so meaning a very complex hand. An AI mind that can navigate and comprehend reality, and we made in very high volume. Those are the three things that are missing. Like we see any other robotics company, they're missing those three things. Those are the three really hard things. I spent actually at this point it might be more of my mental cycles than anything else, any other single thing on Optimus. That's solving for real world AI, all of the electromechanical issues of Optimus, the supply chain and production challenges of it, because there is no supply chain that exists for humanoid robots. So we have to recreate it from scratch, and which requires doing a lot of vertical integration. None of the actuators in Optimus are available from an existing supply chain. But I think it is accurate to say that if successful, Optimus will be the biggest product ever.
Okay, so same thing again. His big idea, and notice that if you have been following Tesla, November 6th is their shareholders meeting. Okay, and it's probably the most important shareholders meeting for Tesla in their history, because he will be unveiling the third version of his Optimus robot. And we all know that AI and automation is coming, and it's coming fast. And basically, with this robot, he's able to offer the world a solution to depopulation, because there's not enough workers to go around for factory and commercial purposes. There's also not enough people to take care of the existing population. So if this Optimus robot works out, he's able to 10x their earnings and give the world what he essentially calls the biggest product ever in humankind. Some people say that we are entering a second industrial revolution, and Optimus robot and robots, basically mechanized robots, will be like the automobile or the discovery of those kinds of things. So clearly, the big idea is Optimus. His target audience is shareholders. So one big idea, his three messaging, his audience being shareholders, and he uses data to say that essentially Optimus will be the biggest product ever. If you notice that the Tesla stock has actually outperformed the NASDAQ and S&P over 5 years, and of course on expectations of future returns. NASDAQ has returned about 113.2% over the last 5 years. The S&P has done about 95%, but Tesla has actually done double the returns of NASDAQ. So, of course, the market has been buying Tesla shares on expectations of future returns, things like Optimus, robots, things like robotaxis. And Musk knows that he's trying to do these radical things, these revolutionary things, and he's got to be in the media's glare to really transmit how he's getting there, the milestones along the way, and constantly reminding the market of the progress that they're making. So he's out there getting it done. He realizes he cannot not embrace and utilize the media at his disposal, because to not do so would prevent his company from reaching its full valuations. If you notice, Elon Musk doesn't speak so well. He's actually one of those people who has ADHD, and he's a bit of an introvert. He's actually an engineer, but like Jensen Huang, he realizes that he's got no choice but to come out and be the face and voice of the company. One more thing before we go to the last couple of slides. A lot of people would realize that many of the biggest companies in the world are now being led by India-born CEOs. Now, it is something that I actually asked Sanjay Sama of MIT, Asia School of Business some years ago. And he pointed out this research that's done by MIT, by a guy called Jackson Lu, well, two of them, Jackson Lu and Richard Nesbitt and Michael W. Morris. They did a deep dive into why India CEOs get promoted so much further than Asian CEOs like from Japan or from Korea or from China. And in essence, it's because of our cultural differences. Middle Asian CEOs like India CEOs are very, very assertive. Their culture is very outspoken. They're not afraid to speak up because of their backgrounds, and they're very vocal, very assertive people. Versus East Asians, who we know our culture. We are very quiet, we're very low profile. We prefer not to speak up and voice our opinions because it's maybe construed as rude. But that also translates into the malaise that a lot of public listed companies in Malaysia suffer from. We have a lot of companies in Malaysia that are fundamentally sound, that have got very, very strong business models, but unfortunately trade at single-digit PE ratios. And it's a very, very big shortcoming, especially in the mid-cap and small-cap companies. And many of these companies are typically led by owners, right? Where English might not be their first language, where culturally they may not want to come out and speak up. But that hurts their shareholders, that hurts their market cap, and it detracts from the reasons why they became a public listed company in the first place. So that actually formed the basis of why I suggested to Bursa, maybe we should talk about this and voice this issue to people who work in PLCs to try and assert the fact that their companies should actually try and be more vocal, especially when you have a very, very strong business model, you're fundamentally very sound, and you've got a fundamentally strong future business that must be communicated to the wider market, because if the wider market does not know what you're doing, does not understand the things that you're trying to do, it cannot give you the valuations that you deserve. Now, of course, most Malaysian companies do not have the kind of like radically different or revolutionary business models that MicroStrategy or Tesla or NVidia might have. But still, we have very, very strong companies in Malaysia that are unfortunately trading at very low market multiples. It's a shortcoming that I feel quite strongly has to be addressed. Okay. So to end, I want to point out that the golden rules for 1%er spokespeople is the ability to master both substance and form. The substance is the ability to understand who their most important stakeholders are, to address that audience with messages that are relevant and newsworthy. That means they must be replete with details. They control typically the narrative. They control the internalities. They control the externalities. They use the media. They use the media to send messages to these stakeholders in a performative way. That's the form, in a way that transmits confidence, poise, energy, and integrity into the audience to make them understand that these are the right people to lead these businesses. And of course, different styles for different people. Elon Musk and Jensen Huang are company owners, so they are therefore a bit more charismatic and a bit more ebullient. Professional managers tend to be a bit more conservative and a bit more serious. Different styles, but always personal, very effective. When you have an alignment between the substance of what you're saying and the form and the way you look and sound while saying it, is actually really, really powerful. And the 1%ers are able to build a vision, a narrative, a storyline for their companies, which give them this ability to differentiate themselves from their peers. It's a vision which allows Tesla to be traded at 4 or 5x that of comparative automakers. It is a narrative which allows something like NVidia to be traded at 3 to 4 times that of the comparatives, and so on and so forth. The biggest brands in the world have a very, very compelling narrative which enables people to buy into their vision, recession or recession, good times or bad, they're buying into the company. Those brands are things like Apple, things like Bitcoin, things like Patek Philippe, things like De Beers Diamonds. They have big brand visions, big brand which differentiate them from the rest of the world, which gives them this product loyalty, this product stickiness, which stands the test of time. Recession or recession, people are buying their products. I'm not going to go into every one of these bullet points. Suffice to say, just to mention that the 1%ers, they never lose control. They never answer questions. They don't wait for questions. In fact, they use the media to message relentlessly. Okay. So that's my presentation done. I've left about 15 or 20 minutes for questions, if there are any. If there are no questions, I'm going to go into these bullet points and go through them. Sean, do we have any questions to address?
Yes, to the members of the floor, if you have any questions, please type under the Q&A section. We have a question earlier on. Can you share some examples of 1%ers perhaps in the Bursa Malaysia, in the local market? Anyone you can think of?
Okay, examples of 1%ers. I've got to say that the best example I can think of is two. One of them is Afzal Abdul Rahim. Afzal Abdul Rahim is the CEO of Time.com, and he was actually the 14th CEO of the company that came on after people like Bob Fox and Tan Sri Halim Saad, and he was able to turn around the business in the last 15 years. Afzal's power is his ability to use the media, to narrate the vision, to control the narrative, to build public awareness of the immense transformative journey that he was doing inside Time.com. Not only was he and his team very, very efficient operationally to turn the business around to make it a very, very profitable company, but he was also able to use his ability to speak, to then communicate to the public and to institutional shareholders that he was doing all this good stuff inside. I've got two examples to share with you. And it's an example I constantly talk about when I train CEOs. The first example was when he came on to BFM in early 2010, 2011. He was, I think, in his early to mid 30s at the time, very much an unknown quantity. And we were wondering, who is this guy that has come on along with his partner, a guy called Ganti Shen, to control essentially, I think, 50 or 60% of the Time.com via a special purpose vehicle called Pulau Kapas Ventures, which was a joint venture between Ganti Shen and Afzal and Khazanah National. So he came on BFM and he was supposed to come on a live interview, I think somewhere 2010, 2011. Okay. We told his PR person to get Afzal to the radio station by 7:30 for a coffee and a debrief, and then the interview will start at 8:05. 7:30 comes around, no Afzal. 7:45 comes around, no Afzal. 10 to 8, we're a bit getting concerned. We've already announced that Afzal is coming on air. Still no show. 8:05 comes around, still no Afzal. I'm not going to tell you what he said when he first came, because it's quite interesting what he said. But essentially, he eventually rocked up to the radio station at about 8:05, 8:10, and we started the interview at about 8:10, 8:15. What did he do to us by not coming on time? He was basically telling us, essentially, that you don't tell me what time to come, I will come when I want. And he was actually, in essence, I understand this now, years and years later, he was actually controlling us. No, we control him. So in the traditional world, companies will always say, oh, you want to have an interview? Please send me your questions. We will prepare the questions for you. No, because you cannot, that is not the right way to do this. The right way to do this is to prepare messaging and control the narrative from there, because you cannot prepare for every question in the book. So the 1%ers will control the media. They will use the media to send messages to the audience. And that is exactly what Afzal did. But intentionally, I know that I think that is what he did after all these years, he intentionally came late to throw us off, so that he wanted to shift the balance of power from us in the media to him in the company. Interview starts, first 1 or 2 questions, lowball questions, easy questions, and then I fire this one at him. I said, Afzal, nobody knows who you are. You and your partner Ganti should have turned up via this special purpose vehicle called Pulau Kapas, and your partners in this venture are Khazanah National. I'm essentially alleging, or I'm essentially alluding to cronyism, right? And I remember this very clearly because when Afzal heard that story, that question, he paused, he understood what I was trying to do. He then looks at me in my eye and he says, Chuang, has anybody ever told you? And this is on live radio, by the way, live BFM Breakfast Grill live radio. He says to me, Chuang, has anybody ever told you you have beautiful eyes? And I've been a journalist for like 25 years, and I'm like, what the hell has happened? Why is he answering the question? Why is he suggesting that I've got beautiful eyes when in fact I know I don't have beautiful eyes? I'm Chinese. Okay, that's quite clear. That's him understanding that he doesn't want to answer the question. And as I'm surprised, he goes off on a tangent and starts talking about what he wants to talk about. So again, just like how those other 1%ers like Michael Saylor and Jensen Huang, he doesn't answer questions. He doesn't wait for questions. He says what he wants to say. He sends messages to his audience, to his shareholders, and that's exactly what he did in 2010. He doesn't do that once, he does that twice. After the break, I asked him again another seemingly tough question. I said, Afzal, we look at the analyst research on time.com. I think 9 analysts cover your stock, but the street does not seem to think that you have what it takes to lead time.com. From the 9 analysts that cover your stock, 7 are a hold, 1 is a sell, and only 1 is a buy. So then he stops again. He looks at me again. Then he looks around the studio. He says, Zhong. And he adopts his fake Chinese accent, right? He says, Zhong. Wow, your studio color very nice. Is it Dulux? And I'm like, gosh, he's done it again. He doesn't answer the question. He just says something to put me off, and then he goes off on his tangent. So again, this is a very extreme example of a 1%er, but this is an example of someone who is like Elon Musk and who is like Jensen Huang in the sense that they own significant shares in the business. They got agency and autonomy to free will the way they communicate to the stakeholders. And but it's really those key principles at play, which is the big idea, 1 audience, 3 messages, 60 seconds. And the key technique that he was deploying at that time was control. He was using BFM, controlling us in the media to send messages to his audience. And he was only saying what he wanted to say, not what I was going to ask him. That's one example. Another example is Tony Fernandez, but I won't talk about Tony Fernandez because maybe it takes too much time and we'll take other questions instead.
Okay, the next question on the line from Alex Lam. If your leadership team does not have the presence or confidence like all these 1%ers, how do you navigate building strong brand value and perception of your company?
Well, that's the eternal conundrum, right? So I've seen, for example, I think a recent example was EcoShop. EcoShop was listed earlier this year. And actually the Dato Sri there who actually founded the business, his native language isn't in English. I think he's a Mandarin speaker. So what he did, I think he realized the need to be able to have a team that can communicate to fund managers and sell-side analysts and customers. So he hired professional managers who can do the job. He put them through the training necessary, and I think they supplanted him. So in cases where you either don't have the ability or don't have the skill set, or don't even have the mindset to do so, you then I guess have no choice but to hire professional managers that can do the job. Another example is Mr. DIY. The 2 brothers who own the business actually, again, I think quite similarly as EcoShop, English not the main language, not too comfortable in front of the media, not too keen to be the public face. Hired the professional manager. I think the CEO is a guy called Adrian, and he fronted the media, but even Adrian himself wasn't so comfortable. He went through it because it was necessary for Mr. DIY to have a public persona, to have a look and feel to the company. And so in cases where you don't have that management team, I guess no choice. You've got to put the professional in charge, in front. Of course, another example is Paramount Corp, the property company. It's a family-owned business, but they hired a CEO called, I guess, a gentleman named Jeffrey Chu, ex-OCBC CEO, very good in front of the media, speaks really well, and who was able to deliver this narrative to shareholders that Paramount was going from the business that they're doing in the past to the business that they're doing now. So in cases where you don't have that ownership that are able to do the job, to be the public face, I guess no choice but to hire the professional managers. And in certain cases, they also hire foreign CEOs, the British guy, the Australian guy. I think, for example, CETOS hired an Australian guy, or a New Zealand guy, to fund the business. So that's what oftentimes companies will do to get around that issue.
Thank you for your question. So the next question is, will the power of perception still be as effective if a non-CEO or non-chairman, for example, one of the company's management, stand up as the spokesperson of the company? Will they have as much authority?
So I don't understand. An ex-chairman?
Sorry, a non-chairman, one of the company's management, who acts as a spokesperson.
Yes, it can happen because I used to work in the UK, and in fact, in the UK, I was covering small caps, I was covering renewable companies, and I was actually covering energy sector. And in many cases, we were the people that fronted us in the press, and I was working for Reuters at the time. Actually, the spokespeople for the business was actually the external investor relations companies. So the people that gave us, who we interviewed for the company, who were the actually spokespeople for the business, were the PR companies, the IR companies, and in those cases, firms like Financial Dynamics and agencies like that were actually our point people for the companies. These people who headed the business on behalf of the companies were the people we quoted, and we quoted them as a spokesperson for the business. And they were so capable that they were actually hired from the industry, and they knew the companies as well as the CEOs and CFOs themselves. So that was the truth of the matter. So the short answer is yes, that can happen. It's not so common in Malaysia, but in developed markets like the FTSE in London, that's indeed the case.
Moving on to the next question. In adopting a strategy of focusing on messaging as opposed to answering questions, could that not backfire? Like, for example, your beautiful eyes comment, and will it give a opposite impression of incompetency?
Yeah. So obviously, Afzal is an extreme example because he's a company, or he owns a substantial share in the business, and so therefore he's got a lot of agency and autonomy to speak spontaneously. For the vast majority of public listed companies that are run by professional managers, you cannot do that. And I always say that you shouldn't pursue a policy of answering questions, because questions. So the thing is, the more credible the media platform, the less likely they are to give you their questions. The less likely they are to follow a preset questions which they share with you. They will give you discussion points. You'll never see the Financial Times or Bloomberg give you the exact questions. They'll never reveal their angles to you because that's not what they do. They expect the company to be fully capable of answering any question in the world at any point in time, because that's why the CEO is the CEO. So the correct strategy, which I've always said to companies, is never prepare for questions, because not only will they not give you the questions, every single question is dynamic. Even, in fact, if your interview starts at 2 o'clock and you at 5 minutes to 2, something happens, a plane falls out of the sky, a bomb goes off, and all bets are off. The questions that come your way at 2 o'clock will be very, very different from the questions they sent to you. So you cannot prepare for every single question in the world because there are too many permutations. The way to address it is to come from preparing messages and to preparing the story first. Because if you understand the mind of the media, whether it's traditional media or social media, all media want a story. And that's the naked truth of the matter. If you understand the mind of the media, you can control the media. And the media only want one thing. The media want a story. In the traditional media, they want a very strong story. In social media, they want something which is engaging, which will increase subscribers and shares and likes and comments. But either way, the common denomination is they want a story. The bigger the story, the better. So the media will come to you with a set of questions which they think is a story. Your job, from the company perspective, is to give them a bigger story, a better story, because from your perspective, you only want to give a story which is positive and conducive to the business. The media perspective, whether good for the company or bad for the company, is a story nonetheless. Oftentimes, the media will come to you with a negative connotation. Markets are down, what do you think? Or things are going south, what do you think? I always tell spokespeople, whatever comes from your mouth is at worst neutral. You always want to put a positive spin on your company. So the only way you can do that is to prepare relentlessly for messaging. So the rule book is this. Understand the stakeholder. So if you're the CEO, for example, and your key stakeholder at the time is the shareholder, understand who your audience is, prepare the messaging that your shareholder wants to know, that your target audience wants to know, put substantively strong data points to them, and then deliver them in a very clear and succinct fashion, which is of high impact. And that whole process is actually a very rigorous and arduous process because message development is not easy. Nor can you devolve that responsibility to the comms department. The reason why you can't devolve that responsibility to the comms is because they're not in the trenches. They're not operational on a day-to-day basis. They don't know what is going on. They don't know the good and the bad in the business themselves. So messaging must emanate from the spokespeople themselves. The development of that messaging must come from themselves. The data points must come from the spokespeople themselves, and then sent to comms to align across the board to finesse. But that whole process of message development must come from the spokespeople themselves. And then the bigger the story, the better. And that's the only way you can control the media, when you give them a story which is bigger than their own angles themselves. That's how the 1%ers control the media. That's how you can use the media to your advantage. And that's the secret sauce. That's the game. That's the game that the 1%ers play all the time.
Okay, the next question is interesting. From your journey of drilling interviewees so far, what was the sharpest response that you have come across? Any unprecedented reply that has turned the table around?
Okay, two of them actually. Dr. Sri Idris Jala from Pemandu. This is when he first came on from Shell, and he was tasked with turning the government around. And he was sharp. He was very, very sharp. He came to BFM at about 6:45 in the morning. He actually came before anybody else came. He was waiting downstairs with his wife, no PA, no special officer, no bodyguard, no driver himself. He drove himself to the radio station, waiting downstairs with his wife. He had a manila folder this thick. And he actually arrived before I did. I came at about 7:05. This is the days when they only started broadcasting at 7 a.m. And so he spent the whole 1 hour before the interview started, just preparing, going through his huge manila folder, a lot of notes, and then just going through the notes. I could see him just voicing the date, just silently mouthing the points he was trying to make. We went on for about 90 minutes, a live interview which lasted about 45 minutes, and then we took another 45 minutes worth of live calls from the audience, from their cars, until 9:30, until the 9:30 news. Every single question I asked, he had an answer with data. Every single question that the audience called in from the public, he had an answer with data, with strong qualitative data. In the one instance that he did not know the answer to that question, he was able to go to his manila folder, know exactly where the manila folder was, went to the exact spot within seconds, and voiced that number to the audience. The only reason he was able to do that is because he was exceptionally well prepared. Exceptionally well prepared. And he blew me away with his ability to narrate his vision for the Malaysian government in a way that nobody else had. He was going to transform via Pemandu the Malaysian government and the Malaysian civil service. That's the first example. The second example is a guy called Dr. Lee Chongren. I can't remember. He was a Chinese guy that represented Country Garden. And he came on BFM, and he was supposed to talk about the two or three islands that were being reclaimed by Country Garden off the coast of Johor. The press had positioned this project, this huge mega project, as a white elephant. And it had a very, very bad reputation at the time. This guy, very young guy, Dr. Lee, I can't remember his full name already. He came on and he was able to, with his preparation and with his data points, to convince in fact, not just me, but the audience that the Country Garden reclaimed islands were going to be a feat of engineering, environmentally sound, and an answer to the overpopulation in Singapore, and an answer to residential woes in Johor. He was able to completely change the narrative in 23 minutes with his delivery and with his preparation and with his data points. Those are two examples that really stood out. And again, the principle is this: understand the audience, prepare the messaging that they want to know. Put yourself in their shoes and to tell them what they want to know with details in a very clear and concise fashion. And that's what he was able to do. Chen?
Hi, John.
Hi.
John, sorry. Cheng has having an issue with her PC, with his PC.
Okay.
Yeah,
Okay.
I think we have answered most of the questions today.
Okay.
Yep. And no more coming in from the floor anymore.
Okay.
Okay.
Thanks for the questions.
Yep. It was a really interesting session. It was an interactive
Can I
one.
just say that if anybody wants to get in touch with me, they can do so.
Yep.
This is my email here and my mobile. They can
Yeah,
message
you
me.
can. Yes, please do so, Chong.
I flashed it on the screen, so if anybody wants to mail me, they can do so.
Yeah. Before we end the session, I think we would like to remind that we will be uploading the presentation slides and also the recording of the webinar on our site. We have shared the link in the chat box.
Okay.
Then with that, we would like to thank all participants and especially to Chuang for being with us today, being a great speaker today. Thank you so much and have a
Thanks,
good day,
Vedas.
everyone. Yeah, thank you, Chuang.
Thanks, guys. Thanks a lot.
Thank you all.
Thanks. Bye-bye.
Bye-bye.